Hey guys, what's up? I'm Mark, and in this channel, I talk a bit about lifestyle, but I mostly talk about personal finance and investments. In this video, we're going to be doing an update regarding the SeedIn Technology platform. As shared with you last year, I've used this app through its matchmaking service. No, not that kind of matchmaking. Through SeedIn, small to medium-sized businesses are actually matched with individual investors such as ourselves. So basically, SeedIn is a crowdfunding platform so that SMEs can raise funds for whatever projects they have, may it be in funding their next inventory, their expansion, or renovation, or whatever business plans that they have. Based on the SeedIn website, it says that the average returns for each project is at 7% per annum. Now, based on this headline, of course, I recommended it. But is it delivering right now? It's been over 7 months since I invested through this platform, and what I'm about to tell you is that my returns after investing in a handful of projects is at 4.3%. Why is this the case? And am I changing my recommendation of SeedIn? Let's find out. Now, before anything, I really started with a small amount in SeedIn. So more or less, I've only invested about 10,000 pesos. So with this 10,000 pesos and about 9 projects that I've invested in, I did the math, and yes, I'm only doing about 4.3% over a 1-year period. So what happened to the 7%? Well, there was one big mistake that I missed out on, and my sincerest apologies that I did not catch this in my first video. So what's advertised per project in SeedIn is actually still of the gross percentage value, meaning that these are still not yet net of charges and taxes. So what SeedIn charges as its service fee is actually 10% of your earnings, and the proceeds are subject to 15% of withholding tax. So does this platform suck? Should we just ditch it? Well, before getting to that conclusion, let's review my numbers. Based on the 9 projects that I invested in, my lowest return is at 0.75%, but my project with the highest returns is at 8.13%. Now that's pretty good. That's what I wanted. What I'm seeing here is that if we invest in the right projects, then we can actually get great returns. So no, I wouldn't ditch SeedIn altogether. I would just properly choose and screen the right projects from the right businesses. And here I'm sharing with you the ideal criteria of the projects that you should be investing in. Now, looking at the handful of businesses and projects that I've invested in, I've actually invested in projects that had to do with software, real estate, the pet industry, retail and trade, and construction. I'm sharing with you a better criteria so that you don't have to go through the same low returns that I have been subject to in the past few months. So just as a refresher, when you go through the list of available investments, you're actually presented there the guaranteed returns per annum. The higher the returns, of course, the better, or so I thought. But what I missed out on was actually the tenure of the project. So these two go hand in hand. You have to be looking at projects that have projected high returns, but also with the project running over a longer period of time. Case in point, I invested in a project that had projected returns of 10% per annum, but the project was only going to run over 2 months. So after 2 months, my returns was only at 1.25% after service charges and withholding taxes. So much for that 10% per annum. I'm simplified this formula. What you should be looking at would be projects that have returns of 9% per annum, but also running over at least a 9-month period. So let me repeat that. The ideal projects would be 9% per annum over a 9-month period. Now, of course, this is not a hard and fast rule. If it's a project that's a little lower than 9 months, maybe 8 months, 7 months, then maybe you should consider it as well. Or maybe if the percentage is a little lower than 9%, but it's running over a longer period, maybe that's something you should consider. Do see for yourself what you might think might be better for you. All our situations are different. So even though this is my recommendation of doing a 9-9, you are of course free to work around these numbers. Admittedly, when businesses post on SeedIn and they do a crowdfunding, the buy-in period actually happens quite quickly. So I found it most convenient to be using SeedIn's Alfred Auto Invest facility. Now with Alfred, you can actually set your criteria based on what I just gave you, or maybe you can make up your own how much you want to invest based on the term of the project and also based on the projected per annum returns. So with the Alfred Auto Invest facility, you'd be first in line, then you don't have to manually look at the projects since you already have Alfred doing this for you. Alright, so that's about my criteria of what projects I invest in. I still personally think that SeedIN has a place in my portfolio. I like it because it has the potential, probably performing in the same level as bonds or bond funds. I know it probably won't be performing alongside stocks or equity funds, but it's something good to have there in my portfolio. And as a side note, I like using SeedIN because I kind of feel like a shark in Shark Tank. Well, I'm not really investing in equity in these companies, but being a small business owner myself, I like seeing how these businesses are raising their funds. At least gives me some perspective of how I can do this for my own business or maybe for a business that I may have in the future. If you've liked this video, please don't forget to like, comment, and consider subscribing if you haven't already. Thanks again for watching, guys, and happy investing!